Okay, guys, welcome back. I'm your host, Hector Guizar. Guys, again, we're gonna move forward with step 2 process of pre-qualifying your client, whether it's going to be a first-time home buyer purchase or a purchase to a bigger size property or refinancing their mortgage. Now that you guys got the basics on the stuff that we need, all the documents that we're going to need for whatever program that we're going to apply for, you guys now know the basics of underwriting. We're now going to go ahead and show you guys how to properly fill out a loan application. And so let me go ahead and pull that up for you guys on the screen. Give me 1 second here. And this is what the loan application should look like. This is your 1003, what is commonly referred as in the industry. This is the most important thing to fill out, guys. We got to make sure that whoever's filling out the application they're printing clearly, and we know exactly what they're putting down on this application. So if you could go ahead, you should be filling this out for your clients. So let's take a look at this application into detail, so you guys are not missing anything, or hopefully this will help you understand the application. The first part at the very top, of course, it says borrower and co-borrower. Those got to be signed on who's going on the application itself. Husband and wife. Is it a fiance? Is it 2 friends? We got to know who's going on the application. The first part of the application asks you what type of mortgage and terms of the loan are we applying for. So as you guys can see, we already highlighted some sections that we want you guys to fill out when you're sitting down with your clients. How much do they owe on the property, or how much are they trying to apply for if they're purchasing a home? Are we going to go FHA? Are we going conventional? Are we going other? Are we going to VA? What type of interest rate are we trying to look for? Are we going back on a number of months? Are we going on a 360? Are we going on a 180, a 30-year, a 15-year? Are they looking for a fixed rate? Are they looking for an adjustable mortgage? Make sure that's all filled out. The agency case number, lender case number, that's going to be filled out by the in-house lender guys and your senior loan officers. Part 2 is the property information and the purpose of the loan. Again, the highlighted section says subject property. Which property are we trying to refinance? If we're trying to pre-qualify the client for a purchase, then you could just go ahead and put TBD, to be determined. Number of units. Is it a 1 unit, 2 unit, a quadplex, a duplex? Legal description. The year built. This is also you're gonna find this information on the title website, so make sure that you've contacted your title rep and got your password and your login. What's the purpose of the loan? Is it a purchase or refinance? Is this property the primary residence of the homeowner, their secondary residence, or is this an investment property? To determine the difference between the second residence, ladies and gentlemen, and an investment property is this. If they live in Bakersfield and they own another home in Bakersfield, that's going to be their investment property. If they own a home in Bakersfield and then they own another home in Ventura by the beach, that would be considered their second home. And if you guys go down line by line, take your time, be patient with the client, you'll see in bold lettering, complete this line if it's a construction or permanent loan, which we're not dealing with on the most case. Complete this line if this is a refinance loan. So again, if this is not a purchase and this is a refinance, we need to make sure that we're inputting the following information in the following fields. So year acquired, again, that'll also show up on title. When did they purchase this property? What was the original cost when they purchased the property? How many existing liens are on the property? What's the purpose of the refinance? Rate and term, cash out. Titles will be held in what names? Are we adding the wife onto title? Are we adding the wife onto the mortgage? Manner will be, title will be held in what manner? This is an escrow question. Escrow will take care of this. The estate will be held in fee simple. Source of down payment, either be the checking or savings account if they're trying to purchase a home. Where's the money coming from? And if it's a refinance, usually it will be the equity of the subject property. So as we scroll down to the third part, this is the borrower information. Again, everything's highlighted for you. We're going to need the borrower's name. We're going to need the suffixes if they're a junior or senior. Make sure we could read the Social Security number, their home phone number. Get 2 phone numbers, ladies and gentlemen. Get 2 phone numbers so we could reach your clients, whether they're not answering their cell phone or their home phone number. Try to get 2 phone numbers for every client. Their date of birth, how many years of school, are they married, unmarried, are they separated, how many dependents do they claim, what's the number of them, and what are the ages of each dependent. You usually can find that in their tax returns. Their mailing address, if it's different. I know in Central California, a lot of our clients have P.O. boxes, so put the P.O. box if it's different from their present address. And if they're refinancing, they got to be living in that property for at least 2 years. If they're purchasing, they got to live in that property for at least 2 years, or we're going to need their other addresses, guys. We got to make sure that we're looking for 2 years of solid residence for both the borrower or co-borrower. Section number 4 is employment information. Name and address of the employer. A lot of times the homeowner does not have the address. We can go to Google and get the address for of the employer. Are they self-employed? How many years have they been on the job or in that line of profession? We're looking for at least 2 years in the same line of profession. We can't have a guy that's a mechanic last year and all of a sudden he's a realtor this year. That's not going to fly for a mortgage. You got to have 2 years in the same line of work. So if you're a mechanic at one place last year and a mechanic at a different company the following this year, that's totally okay. We're going to need your position, your title, and the type of business, and the business phone number. Again, if the client doesn't have it, usually it's on the paycheck stub, or we could Google it. This is going to be very important, guys, because we're going to be contacting the human resource department of their employer to verify employment, as we stated earlier in other trainings. So you may want to tell your client, hey, make sure you tell your human resource that somebody from our in-house team, finance team, was going to be contacting human resource to make sure that you're still working. Section 5, your monthly income and combined housing expense information. We need to know what the base income is for the borrower or co-borrower. This is before taxes. How much are they making per month? If they say that they also make overtime and bonuses, we got to make sure that those overtime and bonuses is income that they're getting on a consistent basis and that they've been getting it for the last 2 years. Do they get any income from dividends, from stocks, from other rental property? Over here on the other side where it says present and proposed, this is for both first-time home buyers or a refinance. How much are they currently paying for rent? If we're doing a refinance, how much is their first mortgage payment, principal and interest? Hazard insurance. How much is the real estate taxes? HOA, if they have HOA. And what we're going to do is we're going to compare that with the proposed. If their rent is $1,500 a month, and all of a sudden they're going to purchase a home where their payment is $3,000 a month, that might be a payment shock to the client, and they may not be able to get that loan. When we're doing a refinance, we want to make sure that we're saving the client's money on the proposed section. Okay, we always want to put our clients in a better situation. Okay, we don't want to, we don't want them to refinance and the payment goes up. The only time the payment should go up is if they're tapping into equity and they're taking out all their equity and the loan amount goes up. So make sure you guys are filling that in. Again, what's their present payment, whether they're renting or their current homeowner, and what is it that we're proposing to them. Section 6 is assets and liabilities. Again, we're going to need the name and address of their banking institute. Are they banking with Wells Fargo, Bank of America, Chase, Citi? Usually on the bank statements, guys, we'll have the addresses right there, so we can go ahead and put those addresses for the client, because they're not going to know what address of their banking institute. We want to put in their account number and what the ending balance is in that account. If they have multiple accounts, we're going to need all the account numbers that'll help make this file a little stronger. And of course, liabilities. Liabilities, get in the habit of just writing down everything here. We're going to put down the mortgage. It's with B of A. Their payment is $1,500. Their unpaid balance is $200,000. They have a car with Honda, with Ford, Chevy. Go with the highest balances and then work your way down so we can see how much debt our clients do have. And right here on the lower left-hand side, we're going to see if they have any life insurance. Do they have any other real estate owned? Do they have any investment properties? Do they have ownership in any businesses? And do they have any funds from their retirement accounts? 401ks, IRAs, etc. As you see, it continues, assets and liabilities. This is for clients or homeowners that have multiple properties. We're going to go ahead and put in their other property, their duplex or triplex, wherever it may be. And then you're going to put what type of property is it? Is it a single family residence? Is it a multi-unit? What's the market value on that property? What are the outstanding mortgages and liens on that specific property? What is their gross rental income that they're receiving from that property? And do they have a rental contract for that property as well? What is the mortgage payments minus insurance? And it'll give us the net rental income to see if that property is actually a positive cash flow for that homeowner, or is it a negative cash flow property for that homeowner. Part 7, details of the transaction, is usually going to be filled out by the senior loan officer and underwriter. They'll go ahead and fill out all that information for you. Again, all we're going to ask you guys to fill out, if it's a purchase, just put in what the purchase price is that they're trying to get pre-qualified for. $150,000, $250,000, $1 million, whatever it may be. Part 8 is the declarations. This is where everything's got to be true and accurate for the borrower and co-borrower. They're going to ask you the questions that are stated on the application. Are there any outstanding judgments against you? Have you declared bankruptcy in the last 7 years? Yes or no? Go ahead and go down the list and just do as it says. Check yes or no for borrowers and co-borrowers. Part 9 is the acknowledgement and agreement. That's going to be signed by whoever's going on the application and dated. Part 10 is information for the government and its monitoring purposes. This is to see if, what's the ethnicity or the race of the client. They don't have to furnish this information if they do not want to. This is just for surveys to see who's getting more mortgages done quicker or not, to see if there's any funny business going on in the lending world. Continuing sheet is the last page of your application, guys. This is a blank page, but this is where you need to put in any details for your senior loan officer or underwriter. Does a client want to explore a 20-year option, a 15-year option? Or they want to explore to take out money out of their property if there is value in the property. We may see on Zillow or Trulia that the property may be valued at $250, but after we do a full appraisal, the house was actually worth $300,000. So we want to make sure that we have all the information, any other options that the client is considering, or if they've already been shopping us, have they contacted their current lender, are they working with the local broker in the community. This is the page that you put all the information in for us to figure out. So when we come back with those options for the clients, we know exactly what we're getting ourselves into, and so that we also can be competitive with the client. Guys, we're seeing a lot of applications come in that are being filled out, not thorough. So make sure you guys are seeing this video, replaying it over and over, so you guys know how to fill out a loan application. Again, this is going to be very important because after we sit down with the client for an hour, hour and a half, we got all the documents, we made copies of everything. We need to make sure that we know who's going on the mortgage, what kind of options that they need or they're looking for, and make sure that we have all the stuff that we have in the application, so we're not having going back to the client and re-asking for it again and again, and then again you don't look as professional as you should be. Again, that's going to end our training for today on how to fill out a loan application. If you guys don't have a loan application, you can go to our website, as you see on the screen. Click on Information Center, and as you scroll down on the left-hand side, it will say Highlighted 1003 form. Go ahead and print that out. Make sure that your office has a couple copies there for clients when they come in. And go ahead and download one form right now, print it out, and just practice. Practice filling out the application as if you're purchasing your own home or if you're trying to do a refinance yourself. Practice makes perfect, guys. So make sure you guys are out there and taking advantage of the training that we give you guys. Until next time, I'm Hector Guizar. I'm your guys' coach for today. See you next time.